That's me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big move.
I think we have Luca on as well. So KT, if you want to start, and then maybe Luca next, just some observations in the market. I do think we saw some uptick towards the end of the day. I think we didn't closed relatively okay. I mean, not super strong, not like extremely weak, but I'd love for both of you guys to chime in.
Yeah, I mean, we did see that little tick up, but at the end, but if you observed, Raul, you saw that Goldman Sachs was actually doing a nosedive, which was strange, right? Because going into the Fed, and what everybody is expecting is faster taper, higher, faster rate hikes, and things like that, and
Which
financial
would
projections.
benefit financials, exactly.
Exactly. So why were they nose diving? Nobody knows if like in the market, usually somebody knows something. So don't know why that happened. But then at the end of the day, we saw a nice little uptick on Amazon. Um, Facebook was showing relative strength yesterday and today. Like there's not much of a flow per se, other than for AMD on the weekly calls for 140. There was not much of a flow in the market also, where people were actually buying crazy options like last week or the week before on Apple or things like, and Gamma squeezing everything. But all in all, was a neutral kind of a close. Did not do anything at all. I didn't make a move. Um, I want to see what Powell says, and then probably we will be able to get the move that we need, and also gives us some mental peace at the moment, trying not to guess. And once Powell speaks, we know the direction, and we can deploy our capital and make some good gains. So that's my status right now.
Yeah, I like the Goldman Sachs observation. I actually didn't notice that. So if anyone missed that, Goldman Sachs getting hit today ahead of the Fed is definitely interesting. Again, anything we say, these are just personal thoughts. Nothing's a buy, hold, or sell recommendation. We're just having a conversation, sharing some of our research. So with that, I want to pass it to Luke just to state any general observations. But before that, if anyone has any questions, as usual, this is open, so you can come up and speak. Just please don't come and pump up a Discord or something stupid. Yesterday we had a product pitch which wasn't even that good. If you're gonna do it, at least make it convincing. But other than that, Luca, go ahead.
Yeah, so today was just more of that volatile, choppy action. You really take a look at the day, and technology leading the way to the downside. That sector down, roughly just over 1.6%. Financials were actually outperforming on the day, which is no surprise. We just talked about it. So the price action we saw today wasn't surprising. I kind of expected it. I think a lot of people expected some selling in those growth names, and then probably some strength coming out of those financials. At the end of the day, depending on where the Fed goes tomorrow, that's kind of the move you want to make if they do come in and they are just as hawkish as what everyone fears. But we really don't know. I, as well as everyone else on this panel, I haven't made any significant moves either way. Actually, this morning, I had one position. Wasn't large, but I did exit that position just because I want to be stocked up on cash for either way the market moves tomorrow. So that's kind of how I am sitting. I'm being patient, and I'm waiting for the waters to clear up. I'm waiting to get some more answers here when it comes to the Federal Reserve and what they're going to do. So market action, more chop, more volatility. But you could be seeing some opportunities. These FANG names, they held up relatively well today, but Microsoft down just over 3%. I know at one point it was down quite a bit more than that. So that's one I am eyeing. That's on the watch list. Of course, I always watch Triple Q. Today on the daily, we saw Triple Q come down into the 50, which was notable, and it did find some support there at the 50-day SMA. So I like to see that. And it actually just not too long ago, when was it? It was the 3rd of this month. It bounced off that 50 as well. So that was something I was watching for. I like that. I liked some of the action here at the end of the day. You saw a lot of names bounce pretty hard here at the end of the day. In fact, if you just take a look at, say, like ARC, and you take a look at that 5-minute chart, you can see that came in pretty well really starting right, coming in about, I don't know, about an hour and a half before close. You started to see some solid action there as well. So on the watch when it comes to these growth names, these more speculative growth names. But that's also something I'm watching. So at the end of the day, once again, patience, waiting to see what comes out of the Fed, and waiting for the waters to clear up a bit. And I'll be prepared tomorrow to put some capital to work. But until then, just kind of sitting back and watching.
Nice. Thanks for sharing. So we have Tony on. So Tony, when you're ready, just I guess throw an emoji up or something, and I can call you up. I think you were waiting on a tweet or something that Riley has to share. Roscoe, did you have a question? What's going on?
Yeah, first I just want to make sure. Can you hear me okay?
Yeah, I can hear you.
All right, awesome. Well, first off, thank you guys for doing this. But secondly, like the psychology of trading, I just want to dive right into that. With current market conditions, and being new traders, that's been the hardest thing, in my opinion, anyway. But what are some things that you do to help shift between bear, bull, bear, bull? Swing trading seems impossible at this point. But if you could just speak to some psychology tips that could make you was helpful, and how you switch from bear to bull.
I think Tony and KT probably do that a lot better than the most of us, just because they're more actively trading. I personally don't do it. So Tony or KT, if you guys want to chime
I'd
into
like
that.
for KT to take this. I'm just waiting for trying to put this thread up right now about some charts.
Yeah, that's fine.
It'll help
KT, go ahead.
explain that question easier.
Yeah, so the way I kind of do that is, like I kind of draw my wedges and my patterns, right? Like, for example, you have a rising wedge or a falling wedge, or there's all these patterns that form. And if there's no real pattern, or I'm not seeing anything at all, or the price action, like what Tesla is doing right now, it's between it's downtrend, where the downtrend line and the uptrend line, and it's just chopping around. And I never usually enter those positions. I just watch and see what it's doing, how the premiums are moving, what's the macro on the stock, and I just try to keep myself engaged around the other parameters than going into the trade. Once I see that like there's the touch of the trend lines, or like or a major support resistant levels on the weekly or the daily charts that I have pre-drawn and I'm ready with, that's when I kind of like see, okay, is there okay, now I know what the macro around that stock is. I already know how the price action of these premiums are moving. Do I have the volume so that this can break higher or break lower, is what I kind of check, and then I'm into in and out of positions at that point. So that's essentially what I kind of do when I'm trading, right? When I don't have to trade, I focus on things that are different from going to my trade screen, or my order screen at all. So that's about it.
Awesome. I see we have TSDR. So TSDR, disapprove your request. Welcome on anytime, brother. I think we had Roscoe on, who that question was for, but he might have dropped off. So Roscoe, if that didn't answer your question, if you want some more, you can definitely request to speak again. I have pinned our spaces for tomorrow, which should be really awesome. We have Tony, Stock Talk Weekly, as well as Stock Market News. I'll be hosting them tomorrow at 6 p.m. So if you haven't checked that tweet out, definitely do. And if you can make it at that time, we will be covering a lot of what happens in the Fed meeting and giving some of our personal insights and thoughts. Again, just personal, thoughts will be given. No further recommendations on individual stocks. But Tony, I don't know if that thread's up. If it is, whenever it is, let me know and you can send it to me. I'll pin it. TSDR, what's going on, man? Did you make any moves today?
Hey, how's it going? I'm just picking up my son from school right now, so I'll be brief. But I wanted to hop in here. I'm gonna stay in here, and when I get home, get back to the desk, and I'll be able to contribute a lot. But today I had a pretty rough day trading. I primarily day trade. About 70% of my trading account, my trading money is in my day trading account. But no, I had a pretty not so hot day. Used up a lot of my mental capital early in the morning, trying to kind of force things. I typically on gap days where the market gaps down, 0.5%. I'm typically leaning long. The thing is, we weren't necessarily gapping down to support. We were kind of just gapping down into that secondary range of the Qs and SPY as well. So I knew it was going to be a tricky day going into it. I tried forcing a few longs at the open, and then I tried forcing a few shorts that I thought were showing some relative weakness, and ended up just kind of getting chopped up in some range. The only good trade I had, which was really all luck. I got a coin. This is my son. I took coin long. It was setting up on the 15-minute chart. I posted on my Twitter. Got lucky on some sort of PR news or CNBC segment or something and it popped up to 260 real quick. I quickly sold out of my positions on 260 options, up about 80%, 8% I think I got on it. Other than that, I was 1 for 6 on my day trades. On just normal, typical stuff that I like to trade: NVIDIA, AMD, Roblox, Affirm, UPST, etc. So I'm going back to the drawing board, going to prepare for tomorrow. I'm expecting another kind of tricky day up until the Fed minutes are released, and we'll go from there. I think tomorrow we're going to get a pretty solid picture of what the first month or so of 2022 is going to look like, and I'm excited to see how it works out. I'm sure you guys will talk about, or already have talked about, if they come out hawkish, even in the slightest, we're going to see probably a pretty nasty downturn, and I think that will continue into the early part of 2022. And if they come out, dovish at all, I think the market's going to really like that, and I think we're going to see that Santa Claus rally that we're waiting for. But that's what we got.
I think dovish or even slightly just pulling back on what they said, or coming in line, or slightly coming in line on just not changing their tune too much, is being very firm. I think would be nice too. But thanks for sharing that, TSDR, and I'm glad that you mentioned you didn't do good today, because none of us are perfect, and no one can time the markets or kind of continuously do great with the markets. I mean, if we were, we wouldn't be on spaces like normal people. We're just all normal individuals. We're trying to continue to get better at this and share our knowledge. So, thanks for sharing that, TSR. I appreciate that. I think
Absolutely.
it's definitely less discussed on Twitter. So, Tony, I have pinned that chart thread. If you guys wanted to look at any charts, there's a thread right now pinned above. It has you, DocN, SC, Airbnb, Tesla, and a few other big names, ARK. So, Ross, I see you're back. I think they answered your question briefly. Tony, you were going to add some more to that question that he had asked?
Yeah, no, he answered it.
Yeah, I'm pretty much. No, go ahead.
I'm sorry. I was just gonna say, like, some of what TSE was speaking to. Like, I think that's more what my question was regarding. As far as like the mental aspects, whenever you go red, I feel like I shut down, and then it just goes further, and I'm like, oh my god, okay, so maybe it'll bounce back, and then blow up my account, and then start over, and it feels like listen to trading books and all that, but it just feels difficult. And I don't know if you guys have any advice for that.
Yeah, it's definitely like a super hard market, like one of the hardest markets I've ever been in. I just want to talk about the thread, just because I feel like it'll help shed some color and probably answer a lot of questions just by going over it. So shout out to Riley for tweeting it, because I just did the charts. I just was too lazy to do it all. He's the man. So I'm looking just first here at you, looking at the volume shelf all the way on the right part of it. That little blue rectangle there is just kind of showing where it could possibly jump up to. Because if you see that last big bar, it's going to be hard to get through that one. So then above that is air. That's why every time it gets above that, it just really rallies quickly, and it hasn't traded above there for that long. So that'd be the upside. But obviously, if things go wrong tomorrow, down to 129, sitting there in that other big volume shelf there, and it also is getting into a nice range of support. So just thinking about entries and when to start nibbling. I think that things have just gone obviously a lot lower than most people expected. Most of the best names are down 50% plus from their highs. Even SE is down to 220 today. So if you just look, all these charts are super similar to ARK, and what's going on is it's just continuing to sell all growth. And ARK's the last chart here. So as much as you can say whatever you want about Kathy, and I have that thought as well this year. All these growth names will move at some sense, and even the quality names that we all like, that if people even don't like Kathy, and for instance you I don't know, Unity or whatever, I know a lot of people do, or SC, Tesla, these names all move similarly with growth. So I've still been looking at IWO and IWM and ARK specifically, just to know when those names will start coming back. But the difficulty here and the reason it's been so brutal is just been a nonstop drop. And like that pop recently just caught a lot of other people, and then just go back down. But you could either say it's a higher low double bottom that's going to break out of that trend line down, or you can say that it's on its way to its first line of the of the neckline, like the first shelf there, and then it'll test down to the lower one at like 81. So what I'm trying to say is tomorrow is like super decisive, and not just tomorrow. I think the rest of this week, like we'll know, because obviously the Fed days, you can go and it looks great in the Fed day, and then overnight it flips. So Fed days reverse very often. So we'll have to see like kind of what happens, unless it's like just a staggeringly like big move. But yeah, I don't think that Powell has not noticed where the markets have been going, especially like I've been like looking at so many different threads on Twitter that people are posting, and you like look at indices and things are, and we've been posting this as well on Spaces, like things are at more only like 20% or something of Nasdaq names are making new highs or something like that, and you see all the selling in those names that people are like 4-1 put call arc right now. So I don't know. I think that the pain is definitely to the upside, but I mean, because the pain's already been to the downside. But I do think that like tomorrow and the next couple of days will be super telling, and I think that like if anyone really says that they know what's going to happen, like just like think what if it doesn't, because I know the potential of like thinking so strongly like, okay, this is going to be the time because it is the December meeting and everyone's been leading up to this, and so like it's the fate loves irony situation. But if it's not, it's going to be really shitty. So I think it's really important to know that like I'm into tomorrow, like I'm hedged on all my positions, even though I think that it'll probably be bullish, but I just know that if it's not, it will be very prudent to have like protection. That's all I have to say.
Thanks for sharing that, Tony.
Tony out.
I have a video that Problem Sniper that shared also. It's called A Trader's Journey, Roscoe. I think that may help you. I have it pinned above. TSDR, what's up?
Yeah, I just wanted to make a couple comments that Tony said that I thought were awesome. That yes, Fed days often do reverse. We see an initial reaction, and then often there will be a different continuation or a different trend that follows. So don't let the first few minutes or 5 minutes or however long amount of time convince you of a move in the near term or even longer term. I mean, longer term for me as a day trader, meaning like a couple days. And then I wanted to make another note that one reason why this morning was also so choppy in a lot of names and why we weren't seeing as much follow through was the IWM at the beginning of the day was pushing higher, while the QQQ and SPY were kind of staying stagnant or even pulling back in the first 45 minutes to an hour, which made a lot of the names really tricky. And I often post about the importance of the IWM. People think of it as the small cap index, and I like to just think of it as the broad index. It's got 2,000 stocks in it versus 500 for the S&P and 100 for the Nasdaq 100, right? So I like looking at the IWM overall for the entire market and the things that a lot of us like to look at and trade. And one cool note is this would be another great spot for us to bounce and rally again and really broaden it out, because the IWM is sitting at the same spot that it's continuously bounced off all year since February, and it would just be very typical for us to bounce back from here again and continue to rally. And one of the stats that I think you were talking about 20% of stocks, anyways, the stat that I like to look at is stocks above the 200-day moving average. And
that's another one. Yeah, that's definitely one of the other threads I was talking about. I forgot which ones we were posting up here, but you're spot on.
Yeah, and we're sitting, right around in the mid 20%, around 25 or 28%, I think it was at one point this morning, of stocks above their 200-day moving average. So it really just shows how thin this past rally has been in the indexes. And I know we all, I don't need to repeat it, that Apple, Microsoft, and so on are just leading the way. And I mean, if we do get some dovish comments and we do see a broader rally, I mean, we could potentially have a lot of room to the upside, and just the same, if the big dogs that have been holding up the market, start to fall, and when we see a broader pullback, it could get, nastier. So that's what I got.
Yeah, for sure. I also have a thread pinned on just quantitative reasoning and some of how this stuff works in terms of tapering and rate hikes and everything of all that jazz. So if anyone's interested, definitely go check it out. And Anatoly, sorry if I pronounce your name wrong. What's up?
No, yeah, that's good. Can you hear me all right?
Yep.
Great. Yeah. So thank you for hosting the space and letting me ask you questions. In regards to long-term investing, with three rate hikes priced in next year, how do you place your long-term portfolio? With the general consensus that value stocks benefit when rates go up, particular financials. However, how do you all view growth stocks, in particular high cap and low multiple stocks like Cisco, Apple, Microsoft? And what about the effects of higher rates on higher multiple stocks like DocuSign or Square, for example? Yeah, thank you.
Yeah, I definitely want to just like touch on one thing I was thinking about today, and then like I'll let whoever else wants to finish. I just wanted to touch on this one thing. There's a lot of companies I think we like discuss, and we all at like FinTwit as a whole, like that are going to be consistently cash flow positive and growing at a much faster rate than Fang and such. And like I'm talking like SE very soon, Mercado Libre already, like give most quarters, even Tesla, right? So like you're looking at those names that have already gotten large enough that are now just continuing to crush. And like Nvidia, for example, I think they did their stock split, so the stock's just higher off that itself. But people actually gave it attention because of the advent of like what's going on in crypto this year, and just blockchain in general. Because people sold it off. I remember trading this like a couple years ago because they thought that because crypto dove, and so they thought crypto was dead. So then they wouldn't buy as many chips. But now the reverse has happened. So I think companies that that suit the right theme of the time, and it's less about like finding the companies that are growing, like less about the romanticized thought of like I like this company, it's a new IPO, whatever. Like actually like look deeply into the reason for it and like why it'll sustain even if there's a bad condition, because most likely like I don't think next year will be that fantastic of a year. After like I think we'll get a nice like pop in growth, like a very nice pop in growth, but then I still think that like only the biggest winners will come out of that. So like I'm talking like I still obviously have full conviction in SC. Like it's a joke at the multiple right now. Like it's laughable because even Mealy is like at 52 weeks lows and it's trading at like 5 times sales right now. So like these companies that are still dominating post COVID, in fact like dominating, like SC doesn't have any trouble getting 4 billion in loans, and so like or nor paying it off. Like they have financial stability, and we all know that. So there's like a lot of companies that like that in that higher market cap range that I think will perform very well. I just don't think that you're going to have a sustained rally in small caps for quite a while. Like until we have like rate hikes, actually, I don't think it'll be like it was last year, because when the last time I think we tapered, growth outperformed the S&P like 90% to 10. So I think that, people are looking at it now as if these names that are down 50 to 80% can go down 30 to 40% to 50% more or whatever, which is possible if Powell botches it like in 2018. However, like those are rare situations, and I would like to think that he's learned his lesson from that situation and that he knows how critical this is, not just for the US, but for the entire world right now, to do this properly and taper in an effective way, because like a lot of the financial markets around the world are also unstable. So knowing all that, like, and knowing that you really can't if you fuck this up, like it's really bad. You should not do this. So I think he knows the severity of how, excuse my language, but like it's that severe. So I would like to think that it's not going to be in the bad situation. But I would say that regardless, like think of those companies like SC and Nvidia, the ones that are over 30, 40 billion market cap that are, crushing earnings estimates and have free cash flow is like probably, unfortunately, the word of that year, of next year. Because I mean, it's hard for me to imagine Google going back to 2000, and it won't unless the S&P goes down like 20 to 30%. So you have to factor in like an overall macro crash for Fang to go down because they're so interwoven. So find the things that are closest to Fang and SPY, in my opinion, just because clearly that's where all the focus has been the last 18 months, just keeping the indices higher for a nice window dress.
So I'll answer this question as well for you, Anatoly, because it's a question I also ask myself pretty often. This might sound a little cliche, but I'm dead honest. I mean, anyone that's been investing for quite some time will tell you this. I bought Apple, I think I was mentioning yesterday, I think 2014 or 2015, I forget the date. And at the time, I'm not kidding, the entire market said these things that were valued at 300 or $350 billion market cap. There was no such thing as trillion-dollar companies. That was considered like a big thing back then. Clearly, that was proven wrong, and today all we talk about is Apple. The reason I bring that up is because you talked about growth stocks and you talked about investing in high multiple names versus these FANG names, right? So I own a little bit of both. I own Apple, Microsoft, Amazon, and then I have a lot of growth names, whether it be SC, Square, Airbnb, Coin, Net, etc., Nvidia as well, and so on and so forth. There's a lot. I think I have like 28 positions. But I shared a pinned tweet above, and it literally says, before buying, Are you asking yourself these questions, right? So what problem is the company trying to solve? What are their margins? Are they free cash flow positive? How do they capital allocate, right? So the capital that Elon and Jeff Bezos have allocated within their company has shown its fruits now, right? And what they've done in the past decade has really shown how many different revenue streams they've built, and how many, like, what the return on that invested capital has been, right? The management history and the execution of them, as well as product market fit, how are they growing future, etc. So first of all, you should be asking yourself these type of questions before you're buying a growth stock. Second, a lot of these growth stocks, it's not just macroeconomics. There's so much that happens to them. Like Twilio, I'll give you another example. In 2017, when they lost their Uber contract, and Uber said, we're going to start building this API suite in-house, which, by the way, is a pretty hard business to replicate. That's the reason Twilio's done so well. And then everyone thought Twilio was done. Twilio's price that time was $30. Tesla literally was range bound from 2013 to even until 2020 almost, right? Or even definitely until 2019. And everyone was shorting Elon's stock, I think, to the point in 2018 when he said he wanted to take the company back private because it was dealing with unnecessary constant criticism. So any growth stock you're in is going to go through these down cycles. You're going to see them go 30, 40, 50% up and down. That's why they're a growth stock, right? They have, I guess, that futuristic theme to it in terms of the products they're trying to build, as well as the sector they're trying to emerge in. So it's really trying to figure out, some of these questions that I highlighted, and why you're invested in the company. Like, what is it doing? Do you see that growth continuing? Are you looking at their balance sheets? Are you listening to their calls live, right? Some of the companies you mentioned, like Docu, I'm not invested in that, so I can't speak to it personally. But for Docu, for example, like that product just doesn't resonate with me, right? Like, I don't see that business as a high, like, sustainable model that's going to continuously grow. So it's simple as I'm not going to look into that. Whereas SC, like, I like how they have multiple revenue streams. They invest their capital very, very wisely, whether it be AI labs now, they have SC venture, like their venture arm coming out, which also got into crypto. So I like seeing all those things, right? So then you get into numbers and growth and margin, etc. So these are things you need to be able to kind of deal with if you're in a growth stock. If you don't want to be in a growth stock, then there are a lot less volatile investments you can make. But there's no one on this panel, I think, that can share that conviction. It comes down to you at the end of the day, I would say.
Great, thank you for the insight. Just wanted to touch on the fintech industry. Coming into next year, as I said, with the free rate hikes priced in already. How do you view companies like like Affirm or SoFi or Square? What do you think about those in terms of long-term investing?
Again, I think I said earlier, we can't really get into buy, sell, or hold recommendations, right? These are questions specific to a company and really trying to get an answer on a buy, sell, or hold. So I don't think any of us should be answering that. So I'm just going to hold that question off. And I would suggest, like I said, you have to kind of make that decision. In terms of fintech in general, as a sector, as an industry, I think there's a lot of disruption left to be made. I think these legacy banks certainly are could get crushed by some of these new emerging players. They have technology that definitely kind of challenges the legacy business model. They have good margins. They have good products. I mean, the stuff that these companies have done in terms of their applications that they built, whether it be Square's Cash App or how SoFi's their acquisition of Galileo and how they've integrated that really well, as well as Affirm. Affirm's business model it's pretty sticky. People don't realize how hard it is to build that type of business. So again, there's bull cases and bear cases for that. So all these companies. So in general, fintech, I think, is certainly going to get disrupted. But I'm not going to comment on buying, holding, or selling these companies unless one of you guys feel comfortable doing it. I don't think we should be doing that.
Amazing. Thank you, Rahul, and the decentralized. Great insight. Thank you, guys.
You're welcome, man. Lionel, go ahead. Oh, I see we have MM. I'm going to call you up. Lionel, did you have a question?
No, I don't have a question.
Okay. Do you just want to say hi? Okay, cool. Any other questions? Feel free to come up. But MM, what's going on, man?
Hey, Rahul. Not too much. It's sort of a choppy day, a choppy week, as we've seen. It was one of our expectations kind of going into this week. We'd see some more chop. We certainly are. I think there's a lot of nervousness ahead of the Fed. People don't know quite what to expect, so there's some de-risking, there's some hedging, some of the things that we talked about yesterday. So, on my radar right now, I'm really watching the Fed policy meeting and I'm watching the macro data that we have coming in. We've got retail sales, and then I'm also going to be watching some of the options related flows as we get closer to quad witching. Overall, I think that long term, we're still in a constructive bull market. Uptrends intact. Nasdaq bounced off the 50-day moving average pretty well today, but all that can change if the Fed is too hawkish. So we're really looking for something that's not going to be more aggressive than expectations. And that's really what I'm watching for, is both the policy statement and the press conference and sort of Powell's tone. But overall, today was just sort of a continuation of the choppy tape we saw yesterday, and we saw only a couple of sectors really getting a bid. It was really regional banking, financials, consumer staples, and in terms of factors, pretty much everything was down. But the Russell 1000 and mid cap and utility kind of value plays were the most resilient against a pretty otherwise difficult tape. And we saw an interesting kind of role reversal. Today we started off with the small caps actually green, and then they ended up being one of the loss leaders versus the S&P for a bit until we had that reversal around 1 p.m. And we saw the NASDAQ really climb off its lows the most aggressively of all the indices. So some of that more rate-sensitive high beta stuff was actually getting bought off its lows into the close, and I thought it was really interesting to see ARK actually kind of, neck and neck with NASDAQ on downward performance. That suggests to me maybe some of the selling in those small caps and mid caps that are more rate sensitive and higher beta, those growth stocks, it might be getting a little exhausted here. I also took a look at the IWM, that's the Russell ETF. I see that it's really shorted out there. On Fintel, you see there's only 60,000 shares available to sell short. And you also see on Koifin that there's about 36.8% of units of the IWM short right now. So sometimes when you see that kind of short concentration at IWM, if you get a more dovish Fed like we got on Jackson Hole, you could see a lot of covering and a lot of momentum buying. And we are in technically the bottom end of this range that the Russell's been in. There's a little bit more downside, but there's definitely some room if the Fed is more dovish than expected tomorrow, in my opinion, to see these small caps run and some of these more rate sensitive and high beta stocks run. On the other side, of course, if they're more hawkish, those are the factors that might get hit the hardest, and it might even do some longer term technical damage to this Russell consolidation range. So watching a lot of things, a lot of inflection points on charts to watch. And I think from the macro perspective, the meeting tomorrow is going to set the tone for the first quarter of 2022. So it's a really important meeting to watch.
Dude, completely agree, man. Always like hearing from you, and thanks for joining. I think we had a question. Fire some 7 or pepperoni pizza emoji.
Yeah, you can call me The Weekend.
The Weekend. Okay.
Yeah.
What's up, The Weekend?
Yeah. Thank you, Mr. Lahore, for hosting the space. I have a question regarding the cryptocurrency. So my question is, when a new currency that actually pops up, I mean, it has a great vibration, so you can make a lot of money trading the currency. However, I don't know what makes it reliable, because maybe tomorrow it will get eliminated, So my question is, what makes a new currency reliable?
Are you talking about any specific cryptos, or just kind of the demeanor or the attitude around when new cryptos emerge onto the scene?
No, like just the new one. I mean, the one that actually doesn't have much candles, that just pops up, like it just started like today or yesterday. So how do I know it's genuine?
You shouldn't be buying that. If it just started trading, and if it's a crypto coin that just came out of nowhere, kind of what we've seen in the past year, some of these coins that are just popped up and you don't have much history. Like you mentioned to yourself, right? You can't see a trading candle. There's no history. How do you? Well, first of all, what are you buying it for? It's a speculative asset. So you're basically buying it with the anticipation that someone's going to be paying higher for it down the line, right? So there's no, I guess, technical or fundamental reason, unless it's a crypto that's actually trying to solve a certain problem and has a white paper to it, and actually can get into that, right? So that's just my 2 cents. Again, I'm not sure. Tony, I think Tony's a very good crypto guy. Do you have the coin that you're looking at? Do you have the ticker?
No, actually, but some of them, like some of the currency has like a name similar to, like, let's see, Chili's, for example. So some of the currencies that just pops up, it's named like Chili's X or like Chili's Z, but it's not the genuine Chili's. However, it has a great vibration, and it could be like in the top 5 gainers in the today's market. So
Which platform are you seeing this on? What?
Binance,
Which one?
Binance.
Binance. Okay,
Yeah.
Tony, do you have any idea
Oh
what
yeah,
these coins
yeah.
are?
There is like a doubt. Like I think a ton of coins are mispriced right now. I don't know if he's talking about that, but like if you look at coin market cap, things are not like the normal price. Things are like there's like a bunch of zeros randomly for stuff. So I don't know if that's what you're talking about. But that's what I know for now.
Yeah, I saw that too. I made a what I thought was a pretty funny tweet about some of the price difference and that I saw all over the place. Um, but just in general, I mean, I guess if I don't know if there's a question you're getting at, but the only way to really know the legitimacy or quality of a new product or a new crypto is to really do a deep dive into what I would say for stocks is the fundamental research of the coin or of the dev team behind it by reading the white paper, finding out as much as you can about the project, the utility, and then coming to a conclusion based on peers, meaning similar coins that have a similar use case, and so on, and go from there. But from a technical standpoint, I mean, it's much like trading IPOs where there's very little history to go off of. And I personally don't do much, if any, IPO trading. I wait for them to make these very common IPO base formation to where they usually have a couple days or a couple weeks of excitement and push, and then they come back down to earth and start to form a base over the course of a couple weeks or a couple months, and wait for it to eventually either break out or break down from that base that it's formed, and then then there's a trading opportunity to be made. But with crypto, I'd like to see what Tony says about how he identifies quality projects early on. Yeah.
Yeah, for sure. I mean, when you're buying an early on crypto project, it's basically like you're just like a VC investor, like an angel investor. If you think about it like that, like knowing that there's an infinite amount of like rug pulls and scams out there is just probably step one. Like I think I went over this last time, but like you obviously want to know like the developers. Like the only DAO that I'm in, even though it's been like taking a hit because like all crypto DeFi is getting wrecked right now in general in crypto, is like Wonderland, because we know the person and like they're very active, and like they get mentioned by notable places. So like first step is making sure that people are legit, who actually like in charge of your money or in charge of the investment that you give them, in charge of that company that you're hoping succeeds. Like I just bought one the other day, Basis, and we were like talking about this. But they have like a full on like operational beta, and like they have a revenue model. You know exactly what they're going to be doing. So I thought the company was a good idea, and then I bought it, and like it's up double. But like also you have to understand that coins go super high from IDO or ICO, but they can also just go to zero, right? So like that's the bet, the risk and the bet that you're taking. So like anything new, right? Like you go smaller. Like it's not like I'm not putting my entire life savings into an IDO, because like yes, sure, has it worked, and like you would have been super rich like if you went all in to Uniswap like when it was nothing and at the airdrop, yeah, sure. But it's like those are far and few in between, and those have happened a lot. And like I'm not saying that it won't happen again. Like you'll still get many thousands and thousands of percents on coins. It's just like in a bad market like this, especially just for any risk asset period, you definitely want to like consider just the highest of quality projects. Like I've completely trimmed out of all my like shit coins and like other DAOs and stuff that I've been messing around with, and just concentrated to quality. And like you ride out the storm. So just know it's just like with stocks. Like it is all like crypto is pretty much all one ace, like one bet towards like all of crypto, because crypto does move very much together. Like sure, Luna is like a decent hedge, but even that goes down when crypto goes down too. And like there's other DeFi stuff that you can do to hedge yourself, which is nice, but most of that stuff can also lose value. So just knowing that it's based on just the general feel of the market. Like it's rare for coins to do super well if this market's down, especially like meme coins or like even these new companies. Like I'm surprised Basis is holding where it's holding at like 0.14, and it like IDO'd or ICO'd at like 0.08. So and I think that's like a high quality project that I'm holding. So there's some that are like that, but there are far many more that are just the ones that will end up going to zero. So like if you see somebody talking like on Twitter like, oh wow, this coin is like super sick, la la la, and like it seems like they have a vested interest in it. They do, and especially like check the liquidity of coins. Like Basis IDO was like, or yeah, I mean it's both. And like the Basis like opening was, I think, 20 something million in liquidity, which is like a lot of liquidity for a starting coin. But then you see these coins like, and you can check this on Dex Screener. You always use Dex Screener. It's like you can just see like maybe this coin that someone's talking about has like 100,000 or 200,000 in liquidity. That's most likely a shit coin somebody just made on their laptop, and you're gonna get rugged. So like be careful. Like if you want to play that kind of game, and like I do sometimes too, just make sure that you're trading and like understanding that at some point it's gonna rug. So like you got to get out before everyone else, and like knowing that is like impossible when usually there's like a whole group of like DeFi guys who all do this stuff. And like I'm not saying that they do anything bad, but I like also like you don't know everyone's full intentions, especially with like 150,000 market cap, coins and stuff. So just knowing that, like be careful there. But I think projects that are just helpful in terms of like we need more exchanges, we need better like solutions to DeFi, more security, more privacy, those kind of things will continue to do well. Like obviously gaming coins, metaverse coins, stuff like that. So just kind of like read the market like you would just for stocks.
Awesome. Thank you, Tony, and thanks for asking that question the weekend. Hopefully that answered it to a certain extent. Moving on, Logi Cogs. What's up?
Hey, what's up, guys? Can you guys hear me okay?
Yep.
All right, cool. So I just have a two-part question to the group in general. Are you guys tracking the Senate passing the Build Back Better 1.75 trillion bill as a potential market catalyst? And if you are, do you anticipate that the Senate will actually get it passed before Christmas?
KT, are you following that?
Yeah, Luke, go ahead.
Actually, a headline just came across, like, I don't know, not long ago at all, that the Senate, where is it? Right here. Senate passes debt ceiling increase, sends it to House. So it looks like it comes through now. It needs to just be approved once again by the House, and then I believe it's donezo, if I'm reading into all of this correctly. But that's what I see here on the news front.
Talking about the impacts to it, this is the thing, right? Like, when people say market is forward looking, like when a particular news hits, the market tries to price it in, hits it again, market tries to price it in, hits it again. Next time there won't be any reaction at all. I think this Build Back Better plan or whatever, it's been recorded tape, hitting the market every single time, and now when it gets passed, like I'm kind of a person who's like, if I'm seeing the same news hitting over and over and over again, when the actual event happens, I feel it's going to be sell the news event. So I hope that answers your question on that.
KT, so we're thinking possible FTMP tomorrow, huh?
I mean, yeah.
I feel the same way. I just wanted to have at least someone else in my corner while I say it, because it's like a risky thing to say. But I feel that way. My 2 cents, not advice.
Yeah, I mean that makes perfect sense, because you do see it on the news a lot, and once you get saturated by it, people just might not react to it. So
it's so saturated right now. I mean, like if you look at the puts to call ratio, like all these things, and knowing that this is OPEX, Casey, this is what I wanted. I forgot what I wanted to talk to you about, but this is what I wanted to talk to you about. Like knowing that like ARK is like 3.5 to like 4 put to call, and a bunch of these names are into this December OPEX, like it just almost seems surprising to think that it won't just like the MMs won't clean up on this premium, because they've people playing it down have been crushing nonstop, but at this point it's so heavy on the downside for fear, like for the skew of options. Like you're trading SPX options, and VIX is popping, and like it's like $30, $25 out the money. So every time I've seen all those things kind of hit together, it's not what people are expecting, I think.
Oh yeah, definitely, right? Like today also, like when in the end of the market, like when Amazon was falling 50 points from morning, the put premiums went up like 40-50%. But when the afternoon rally, the 35-40 point rally, the calls went up 60-70%. And like I mean, you're absolutely right, Tony. Like I think most of these MMs will sell all those put premiums and make a lot of money. They're just going to munch on it. So
and you have to delta hedge this, right? Like if you're the market maker in your portfolio of options, you've got written, you've got puts here, calls there. Just thinking like, you have the software. Like, I was, I learned this from a great guy like BearFX, legend guy, but he wrote this, and I thought I'd just share it with everyone. It's just like, you have a wonderful software that tells you your net delta hedge is now this many shares of Apple, this many shares of Tesla, this many shares of AMD. Now, as the day passes and price moves up and down, your feed keeps adjusting and your algo goes and buys and sells it needs to. So, like, definitely, like, this, knowing the amount of risk off right now, thinking about where the risk on would be, I think that, like, it would be almost just like not even long lasting. I think if we do dip, I think it would just, the premiums would scream so high and so hard, and VIX would just spike and then collapse, and then we would just get an uptrend anyway. Like, that's what I would think. Just in a normal. Also, ARK is at like such a critical level, and as much as, like, people say you can't like chart ARK, yes, it does. It moves identically to like all these names. And even if you like that name or not, even if it's in ARK, it will track in someone else's fund. There's crossover to all this. So hopefully we're right, KT.
Yep.
Awesome.
Yeah, and
Go
I
ahead.
just want to talk about another thing with respect to the same Build Back Better plan, right? Like, I see a lot of people who are talking about Omicron and having the same kind of crash from back in Feb or March last year, right? So think about it, right? Like, now we know more about COVID from back then. That back then it was completely uncertain for us, and now there is, you know. Understanding about it, so you can't really expect the same kind of moves, and that's essentially what it is. So as the news keeps hitting and hitting and hitting, it just loses its viability on the market, like its thing to change the market.
Too much of a good thing's a bad thing. Too much of a bad thing could be a good thing.
Yep.
Yeah, I mean, the main reason why I was tracking it as a potential catalyst was for the EV sector, because I know the one that passed recently, the infrastructure bill. They had a few incentives for the EV sector, but I know the one that's for the Build Back Better was supposed to be like $12,500 in incentives for EV. So
Think the EV sector is going to move regardless of that plan or not. I mean, Elon literally came on Wall Street Journal live last week and said, you guys shouldn't pass this bill. So whether that happens or not, we all know Elon doesn't need it. Tesla's going to be at the forefront. EV adoption is going to grow until 2030. I think your question is more of a catalyst question than it is specifically about this bill. What I will say in my experience, just in the markets in general, a lot of these things are front ran and already loaded in before the news bakes in. That's why a lot of time you see is, buy the rumor, sell the news happens all the time. And people get completely screwed playing options on these binary events, right? So it's something if you're, I don't know what the purpose of this question is. I don't know if you're trying to make a trade off of it or you're trying to learn more about this, I guess, news. But if it's for a trade, you shouldn't be moving like capital based on binary events like this. Yeah, there are going to be multiple benefactors of that, but it doesn't happen on one bill being signed, right? It's a trickling effect. A lot has to happen, and everyone already knows it's something that Biden. I mean, that's one of the things he's already like. That's something that Democrats have wanted for a while, right? In terms of moving over to EVs and clean energy and so on and so forth. So I think honestly, the news, whether it happens or not, we're going to see that adoption. And Elon kind of laughing about it on stage nationally was, I think, tells it all. But did you have two questions, right, Nagi Cooks?
no, that was the main thing, just to see if you guys were tracking it as a potential market catalyst and if it was
Yeah,
actually
no,
going to get
for sure.
passed
It's
or
all these things are a
things.
catalyst. I think there's bigger things that are honestly happening. And I would say, just from an investing perspective, I hate playing some of these events or news. Like I said, they're binary. It's kind of like playing an option onto earnings. It's just get the data, understand it, rather than play the swing on the event actually happening. I'd like to understand the data, make a well-informed decision, and kind of base it off of that. But that's just my 2 cents.
Awesome. Well, thank you guys for letting me peek at your head.
Of course, man. Thanks for joining and thanks for asking a question. I think Ferris, you were next. What's up? Ferris, are you there? Ferris tweeting the handle. All right, can hear him. Mic check. Is it me? Luca, are you there? Check.
Yeah, I'm here. You're good.
All right. Yeah. So it's not me. All right. Brandon.
Yeah, we're good.
Staten.
Yo, what are the odds?
Yeah.
Sorry. Yeah, go ahead. What are the odds? Plant
Go ahead,
that
Tony.
link from up here in chat. I just saw Plant Math and I was just
I'm
like, gotta come up here.
I've never heard
He's
him
the legend.
speak live. I'll call
Continue.
him up.
Sorry,
I'd
Brandon.
love to hear from him. Yeah. I just sent him a speaker in my plant. Feel free to come up, man. Um, Go ahead, Brandon.
Yeah, thanks, guys. I really appreciate this. I think the discussion atmosphere is a new way that might fit some people's learning styles as I'm learning. But Markets of Mayhem mentioned when he came on quad witching again, and if somebody wouldn't mind maybe doing a little 101 on that, kind of what it is and how it affects the movement of the market.
Sure. I think it's a good question. I think that a lot of people are thinking about it right now. So, quad witching is basically where you have index futures, stock index options, stock options, and single stock futures all expiring. And that can create or basically amplify volatility. It also means that the passive flows that you have for market makers, where they're reducing their hedges because of theta, or which is charm effects or price moving away from being in the money, which are Vanna effects, those flows basically stop. So you don't have that passive bid, which right now seems to happen around the European Open and around 10 to 11 a.m. or so. Those kind of stop, and so you don't have that. Selling of rips and buying of dips, or when in gamma inverts, selling of dips and buying of rips. That's sort of what happens. I know it's a lot to get into. We're kind of getting in the weeds here, but basically, quad witching amplifies the potential for market volatility. In most cases, it doesn't necessarily mean it's going to be a good or a bad thing, and sometimes it's actually pretty tame. But in essence, you've got people that have to move their positions. What it means when there's this expiration is if you're in a position, like you're in an option or you're in a futures contract that's affected by this, you're going to roll your position if you want to keep it on. So you've got selling in the December month, you've got buying in some cases in like the January month, or in some cases the March month, depending on what you're rolling. And that can create some interesting flows underneath the surface. Sometimes it can exaggerate downside. Sometimes it can exaggerate upside. Sometimes it can just kind of ramp up volatility, so it's more expensive to get in and out of options and things like that. So it really, in my opinion, unless you're really trading the market, like you're actively in and out of positions on a hourly or daily or weekly time frame, this stuff is more just kind of noise that's going to add to chop. If you're like a long-term investor, it's not really a big deal unless you see it as maybe a buying opportunity for names you have on your list, and maybe they're getting the valuations you're attracted to. But for traders, it's usually a day that if you're not a very experienced trader, you kind of sit on your hands and watch the market, because a lot of stuff can happen very quickly. And if you are an experienced trader, you might salivate a little bit at the opportunity of the enhanced volatility potential. Does that help?
Absolutely. Thank you.
Thanks for asking, Brandon. Thanks for joining in again. Just moving forward, Faris, if you're here, you can totally speak. But if not, Newman Thabit.
Hey guys, thanks for answering these questions. I was wondering, how do you usually play OPEX? So I know it's options expiration, but I would like to get some insights on how you guys play it, or is it maybe some things that you don't do around OPEX? Are there some things that you do? Could you talk a little bit about that?
I don't trade at all. I just kind of hold everything I buy into. So TSDR or Mayhem or someone who's trading more actively, or even KT, you're here.
Yeah, usually this was a recommendation that I kind of posted on Monday too, right? Like you can VXX calls is one of the ways to play it. Usually VXX calls go.
Could you repeat that? Sorry.
VXX calls. It's a wig bridged ETF, I guess, like you can play that, and it's usually somewhere around 2022, and during OPEX it goes like this year it usually shot up to around 24 to 25. So on Monday the recommendation was buy 23 calls for next week. That's 1223 or so, and I think they're almost in the money, or in the money. I was not looking at it, but yeah, that's
Can you maybe mention something about mechanics instead of specific plays?
Yeah, like
The
I'm
mechanics
not
behind
recommending the
OPEX.
play. I'm just saying, like that's how I kind of play it, because quad witching, basically you get a lot of volatility. So VIX, so going long VIX is a kind of a play that you can make. So yeah, that and
I guess to summarize that, what KT's trying to say is that's a potential that you could play, but what I think you're trying to emphasize, KT, and correct me if I'm wrong, is you're trying to play volatility, because you don't know individual stocks, what's going to happen with the specific names, but you do know that things are going to be volatile. So that's one way to do it, right? You're just looking at volatility-driven, I guess, tickers or securities you could trade.
Exactly, Rahul. So up or down, I don't know what's going to happen. So VXX or VIX is the way I go about quad witching.
Cool. Does that answer your question, Newman?
Yeah, thanks, man.
Yep, you're welcome. Thanks for joining. All right, I think we have still getting a decent amount of questions. I think we have Thanos next.
Hey, thanks for the space. I joined a little bit late, so I don't know if this is covered. So I'm just wondering if tomorrow's Fed meeting is already priced in the stock market right now, or it's going to be more volatility in the next few months or so.
We've covered this a good amount, I think, in the past. I think few spaces, honestly, and we will. To answer your question, we will be covering it more in depth tomorrow. We have spaces scheduled for 6 p.m. On this handle by pounding the table. We'll be bringing on a few different guests to discuss the Fed. I guess there's no point really discussing it in depth now because we already kind of at that decision point.
Awesome.
I do think, but just to answer your question, to be fair, I do think a lot of this, to be honest, is priced in. The stocks that should have taken a hit have taken a hit. I think what happened is it's something we've touched on. So if anyone's listening, sorry if it's a repetition, but I do want to answer the question. Fed's change in tonality kind of caught everyone off guard, right? So I don't know how closely you follow the markets, but in November when Powell kind of went hawkish a bit faster and I guess really a bit sooner than many had expected, and really changed his tone, which is something he was very cognizant of the whole year. And that's what you've seen. Since that has happened, in the past month or 3 weeks, we've kind of, seen a big pullback in some of these stocks that are going to be affected highly by any sort of change or sensitivity around rates. So, to answer your question, I think some of it is priced in. None of us have a crystal ball. No idea what's going to happen tomorrow. So in terms of covering the markets after we get some more clarity tomorrow, we'll definitely have a space for that. And all of our spaces are on YouTube, so if you missed anything, you can definitely check it out. We've covered this topic, I think, very in depth.
Yeah, thank you so much, Rahul. Thank you.
Yep, you're welcome. Trade Mac. And if anyone else had anything to add to that, I think I covered it high level, but feel free to do so. Trade Mac, what's going on?
Yeah, hi. Can you guys hear me?
Yep.
Yeah, I'm mainly a day trader. I don't hold any positions overnight. So my question is if you guys can give me a couple of options for tomorrow, or what do you guys think about if Fed is gonna be hawkish, this is more likely.
We can't give any. We can't give any.
No,
any stock
you
advice.
don't have to give anything. I just think, what's your opinion? If Fed is hawkish, are we gonna? This is today is the bottom. Is that what you think, or are we gonna see?
Tony, I think you were talking about that a little bit earlier, right, Tony?
Yeah, KT as well. We were just thinking that, it would be a sell the news, which would be a buy the news for growth in the situation. So that's the 2 cents. Just based on we also talked about a bunch of things in this spaces that you can listen to after recorded.
Mm-hmm.
And I'm mentally beat, so I don't want to repeat it. But I think that tomorrow is the deciding day, and then also the day after, because sometimes Fed moves reverse. But I think whatever the move is tomorrow will be probably carried forward, just because I think it'll be a strong decider either way.
KT, anything to add?
Okay. All right. Thanks.
Yeah, I think we've gotten probably, and again, I don't want to sound rude to you, Trade Mac, but I think this question, we've been running spaces for a month now, and I think that question's come up probably 50 times. So, unfortunately,
you definitely know the answer tomorrow.
Yeah,
I don't know.
We're there now, so we might as well wait.
Yeah, 11 o'clock they release the news on CNBC or any other media, and then 11:30 is when
2 o'clock, I think, is the comments, right?
Yeah, Powell starts speaking,
Yeah.
and that's when the market really goes north or south.
Yeah.
So,
like I said, we're going to cover this more in depth tomorrow. We have a spaces at 6 p.m. I'd rather have Tony
and check out all the charts
anyways.
too.
Okay.
That help so these charts.
Yeah, there's things pinned above too that will kind of help address a lot of this. I think TSDR talked about IWM earlier. There's a chart for that. I have a massive thread on quantitative easing, tapering, rate hikes, etc. Pinned above. There's a chart thread pinned above that's literally charting out many of these growth names as of today. So, like I said, we're trying to cover this best as we can. I feel like we're like CNBC over here trying to cover this every single day, but none of us know a perfect answer on this, and I think we're just trying to share as much information as we can. I think Marcus Mayhem tweeted yesterday only 27% of Nasdaq stocks are above their 200-day moving average, so the carnage has definitely been there. What happens next when the bottom is? I mean, I think all of us want to know that.
Banks technically, follow through with, like, if you look at the charts for the last times this happened, the entire indices cratered. But I also think that I'm not saying this time is different, like that kind of this time is different, but I think that there's more importance, and, like, you've done it twice now, and I think there's too much at risk just to have the entire market come cratering as we do tapering. I'm not saying it can't happen, but I think that, like, there's a higher likelihood that it doesn't just come all crashing down, and so knowing that that's been what happens in the past, like, I don't really know what's happening moving forward, but I think I would watch that indicator that you just mentioned of stocks above the 200-day, and then because Rahul, I think we pinned that. I can send that to you again, but that's a great chart.
Yeah, send me anything. I'll happily pin it.
I'd love to discuss a little bit the risks associated with Fed policy, if that's okay, Rahul.
Go ahead, man. Absolutely,
So I've been diving into this a lot since it's really, on everyone's mind, including that of my own. And, 2022, the real theme is going to be tightening, at least for the front half. Going back in time, outside of sort of the taper tantrum episode in 2013, 2014, and the QT tantrum in 2018, usually it's really going to be the later component of the rate hiking cycle that sets off that sort of the market top, if you will. Now, that doesn't mean that every time is going to be the same, and certainly this time could indeed be different from that perspective. But from what I can see, quantitative easing, itself has been a driver of upward revisions in asset prices. But when you look at the balance sheet of the Fed versus QE, there's a correlation with S&P, but it's not extremely tight. Like during periods where the Fed balance sheet is flat, you still have pretty significant rallies in equity markets that continue on. So I think as long as they don't overdo it, as long as they're not too aggressive in their taper and the rate hiking, and as long as they don't come off as being overly hawkish, and as long as macro doesn't deteriorate significantly, I think that we have some room left. But I think what components of the bull market benefit are going to change. I think that later cycle plays may be in favor for 2022, at least for the front half, depending on what the economy is doing. Like if it's fairly robust, over 3% GDP and so forth. But the high beta rate sensitive stuff does also kind of seem like the sentiment's getting kind of washed out to an extreme here. So I wouldn't be too surprised to see a meaningful bounce in growth if the Fed isn't too hawkish. But that could be faded as we get into 2022. But net, I'm not necessarily looking for the end of this cycle yet, though my belief is that this cycle started in 2009 and not 2020, that we're in a very kind of long-term secular bull market, but that it's closer to its end than its beginning. So I do think that we see our next the sort of end of this macro cycle of initial recession probably back half of 2022 or early 2023, and that's ultimately going to be because we have tightening liquidity conditions, slowing global growth, peak consumer participation, a number of other factors, maturing corporate debt, rising rates, a very rate sensitive global environment. But that's a little ways off, and it's not necessarily on the forefront of the markets thinking about what's happening right now. We also have a lot of tax loss selling exacerbating negative sentiment right now. You got a lot of names that were getting beaten up more because people are looking at their portfolio for the last 2 weeks of the year and they're harvesting those losses because they don't think those names are going to recover in the last 2 weeks. So, there's a little bit of that exaggerating some of these moves that are happening. So it's something to kind of pay attention to, in my opinion. You also have some folks that are taking profits here because they can book those profits. And I think as special situations, as Jay mentioned yesterday, they can add that to their bonus. So, there's a confluence of factors kind of driving selling short term. But again, it kind of a lot of this comes down to the Fed and what we get from that. But if they're not matching the expectation of the market as being hawkish to the more dovish side, then that could open room for a lot of short covering and a pretty good amount of upside. If they come in line, we've seen so much hedging and de-risking coming into this that there might be a little bit of relief. I don't know necessarily it's going to be a strong negative catalyst short term. But longer term, periods of tapering don't necessarily correlate to periods of bad performance in stocks. But what you could expect with tighter liquidity conditions is greater volatility and much more of a stock picker's market where some of the factors that were preferred in 2020 and part of 2021 may not necessarily be included, and things like cyclicals, financials, energy, industrials, materials may be more preferred if the economy is somewhat robust in that first and second quarter.
So, TradeMac, you mentioned you're a day trader and you don't hold positions overnight. So that I just want to answer the question for tomorrow. in that perspective. So what I do when I'm in that mode, or when I'm planning on doing that, is write down the scenarios as to what Powell already said and what we might expect. And if tomorrow, if he is staying uncertain, there is possibility of more downside, is what I think. Like where he says, I need to see more data, less tapering, and I want to stay on track with the tapering, and like if he changes his tone and there's some uncertainty, there might be a little dip and then the rip. Things like that happening, first being a fake move or something like that. The second thing, where he goes completely hawkish and says, we need to speed up tapering, inflation is bad, where we need to have more rate hikes and things like that. Jot down your scenarios as to what you're expecting to hear, and when those keywords come out of this, all these terminals or whatever, I understand that you are looking to like typically when I am in that mode, I try to go after zero SPX calls, which kind of go pretty crazy. I mean, in a matter of minutes, you go 300, 500% on your capital, right? uh, so uh, so note down those scenarios and try to see those keywords come out of these terminals or the news outlets, and play that accordingly, and that will give you an edge over everything else.
KT, one thing too, I just wanted to actually just chat with you back and forth about, if you're just looking at like crude and knowing how much of inflation is actually just directly correlated to, commodities, obviously. So, I mean, what do you think? Crude was 85, and now crude's down 20%, and we know that has like gases, things like that. Everything just trickles in. So, I just wanted to know your thoughts on that for, I guess, tomorrow. And Powell also said that into the report, he said that crude drop was not counted in inflation for this like last time. So
Yeah, that's the thing, right? Like he said that, Biden said that, so maybe they were hinting a rally. I quite don't know. Like for me, reading between the lines, and with respect to what they are saying, and reading the premiums, and looking at the charts right now, I, I feel we are at we are hitting that bottom. Like this nice little blip that we have right now is like a buying opportunity going to Q1 next year. But again, I have not taken any actions per se, right? Like it's just my inclination towards the next quarter. But I really want to see what Powell says, and after that, probably I'll drop some conclusions on it.
agreed.
Yeah, so I guess we can bring up our next question, or anyone with a question. Raul actually had to go do something real quick, so I'm taking on the next question. But Maria, I believe that's how you pronounce it. If you have a question, go for it. Yes, no, it does not seem so. Okay, well, I guess we'll move on to anyone else who actually, I see a hand up. Logic. How do you pronounce that name? Logicog. Go for
Logicogs.
it.
Yeah, Logicogs. Yeah, so we're about a month and a half away from the anniversary of when the buy button was taken away for some of the meme stocks like AMC and GME. Do you guys have any thoughts on how the market could react as we get closer to that date?
I honestly just think there's so many more things going on right now that like I'm less concerned about meme stocks. Like I yes, I'm sure everything will get impacted, and like they'll either just dive down a ton because people unwind, or like I don't know. I just think that like the market, everything we've been talking about this space is far more like important to even that question. Like those things need to be in good line for any good conditions for something like that to like rally.
Are we done answering that question yet? Sorry, I had to jump for a second, so I missed the past couple minutes, Tony.
I think KT wanted to say something, but I don't know.
I think Maria was waiting for a while, so I'd like to keep moving on.
No, you hit it spot on, Tony. Like there's so much going on. Like I looked at AMC today. I was like, what? This is at 20? I couldn't even believe it.
Yeah, I mean, I just don't even know what's going on there. Like, there's too many things to watch to worry. I would say there's a lot of other things that are probably going to be less manipulated in a very manipulated already market.
Yep. Maria,
yeah, I
go
think
ahead.
it's important to be careful with meme names here. Very careful.
Maria, are you there?
No, I don't think she is. We tried this like 5 minutes ago,
Oh, did
Raul.
you? Oh, okay.
Yeah, she. I don't know. I don't know what's going on there.
Maybe her
Uh,
mic's off. I don't know if she's used it.
Night King. Night King, did you have a question?
Yeah, can you guys hear me?
Yep.
Okay, just kind of adding on to something that KT kind of mentioned a few minutes ago. I was kind of looking under the hood on SPX options and something also that for those who are kind of familiar with SEM, he kind of mentioned. It seems like there was some spreads that were put out there, almost 23K going up for 46.50 to 47.50. So it kind of looks like it seems like there could be a signal of possibly push up, possibly going forward to tomorrow. And like I mentioned, I was trying to look also just ahead. I saw some things also on the December 31st SVX options as well, on the 4800s and kind of like some of the 4750s as well. So I'm not saying that's a signal for, it's probably going to be kind of like a push up starting tomorrow, but just something to be aware of, just to kind of like look into.
Definitely. I saw those as well, and I totally see why the importance on those. And then I also saw like some huge lots on ES 3600 or 4600 and 4605. So just knowing that like makes me feel like, I mean, because that's real money. Like, it's not like that's like actual like a lot of money. So knowing what's going to happen, knowing that they're like positioned that way, and I did see like a bunch of hedges go on too as well. So I think they're thinking the upside too, like just knowing that amount of those spreads and then those blocks on ES. But those people can get caught off sides too. It's just going to be whoever gets the chair pulled. I really there's no like, yeah. I mean, that's all there is.
One thing, Tony, there was a lot of tweets you sent me. Did you want to talk about any of those? I think, the tweet you just shared, I pinned it as well. Bullish flows into the close. So that's pinned above. Tony, anything to mention on those tweets by Mac10 or
Yeah. I mean, like,
Kantari?
I'm always scrolling Twitter and I just like find information that I think is like definitely useful. Like if you're looking at here, like Larry Tentarelli, Blue Chip Daily, like guy's great at trading. So I just like listen to stuff that he says as well. And just knowing that SPX went like 45% after taper started. So like as much as we're all being bearish, just something to prove about like history. Just considering that like things don't always rhyme, don't repeat, but they might rhyme. And it just got so bearish on every space. Everybody's asking what's going to happen tomorrow. Everyone's wondering, everyone's freaked out, which means that they obviously are either sold a bunch of stuff or already hedged, and like it just seems like the most fatal of irony would be a massive ripper. But just wanted to touch on that. And then like this tweet from Peru, just like I like the chart here. If you look here at the change in like year over year of like monetary supply growth, like we're definitely going to be retracing some of these conditions that have happened over time. But I also think that you realize that like we're approaching like inflection points on all these different indicators. There's like there's the other one, then the IWM positioning index. Like that's the one I was talking about, where the entire market is like up, but like it looks just like 2018 and 2020 in COVID, right? Like that's disgusting. That's like so many names are down so much, and then you look at this like the actual index and like things are fine. And just knowing that what percent of the stocks are making up most of the S&P, most of the Nasdaq, and that's the first tweet here by Wall Street Jesus. Like you really get a good sense for like how SPY is just basically a shell, and it's just like kind of portraying quality and like a good market and a good economy and stable markets and like fairly priced and not super volatile markets, but it's just anything but that. So and that's why I was saying earlier, like I don't know if, and this is I'm talking about chart, the second chart, if you just like from the first, if you scroll, like go to the right here, I just don't know which one it's going to be. So either this reverses and like this is oversold for no reason, but that's a significant move that would make me believe that like the indices would come down. However, the last times it happened, the indices dove right away. So it's like it's very ambiguous. So just knowing that if it starts to turn, it might follow that pattern is something important to note. But also knowing that like we haven't already crashed and we've already been doing that pattern, and that's not similar to the pattern, means that what people just naturally think could happen, like saying this could be 2018, and this could be like maybe it's not. So I just want people to like be open-minded to both sides, because it's certainly like looking at all the data and knowing that like if you do try to do the compare to history, this and that kind of situation, it is not tit for tat right now, because obviously 2020 was just an aberrant year.
Yep. a lot more variables in today's day and age than we had even a couple of years ago. So we're dealing with a global pandemic, and some of the problems we were trying to solve is totally different. Honestly, Trump was president in 2018. We had global tension. We had Brexit. A lot of different things happening. With that, before we kind of, I guess, continue with maybe one more question, I would like to thank everyone for joining. We've been running it daily. I hope you guys find it useful. Give all these guys a follow. These guys do some incredible work. Problem Sniper, Luca, Tony, TSDR, Markets Mayhem. Definitely give Pounding the Table as my host here a follow as well, which is run by Tony and Avi. So definitely give these guys a follow. We've been, I think, churning these away. I think Luke, I think you've been on with me every single one, every day almost. So a lot of people are questioning, what's going on next. We will be on Spaces again tomorrow, 6 p.m. We'll try to do these as much as we can. We've been on since 4:30 or 4:20 today, so we'll keep going just for a little bit because I do see some questions coming in. Alex, go ahead.
Hey Tony, just a quick question. So, do you think the cryptos will react to Fed, or does it have nothing to do at all with what's going to happen tomorrow?
Yes, I'll very briefly say yes. I think they will react to the Fed just the same. I think cryptos aren't trading as a hedge against inflation or any sort of thing like that. I think they're trading as a risk asset, and they will 100% react with risk assets, is my opinion.
Yeah, I agree. I think they're sort of rate sensitive, high beta, and speculative. And one of the things that happens in an environment, if there is concern about risk, is people start asking what are these things worth, and if they can't quantify it, they get scared and they sell them. So, if we have a tighter, more hawkish Fed, then I think a lot of rate sensitive stuff, more speculative stuff, crypto growth, junk debt, et cetera, could all kind of be sold down in unison. And how much it sells down might just have to do with the inherent volatility of the instrument, its beta, But we definitely have room for the opposite to happen too. I mean, if this Fed comes in more dovish than people expect, look at the Russell. I just posted a tweet about this, and Rahul, you might want to pin it up. But basically, you have 36.8% of Russell ETF units, IWM, are short, according to Koifin. At some brokers, there's only 60,000 shares left to short. And we're at the bottom of this consolidation range that we've been in kind of since February, sort of testing that support channel. So the last time something like this happened, I think it was Jackson Hole, where Powell came out just more dovish than people kind of thought. He was more like data-driven and patient. And the Russell ran up like 3% that day, and a lot of it was short covering. So then these ingredients, a high percentage of the units shorted and very hard to borrow shares, these were kind of ingredients coming into it, an area of kind of getting close to this key support area. So I think that's worth watching. If we have a Fed that surprises in it being more patient and more data driven, a lot of these things could reverse very quickly, at least on a short term basis because of short covering. So we have two kind of extreme scenarios, and we also have the scenario of the Fed kind of coming in line with expectations, which could still trigger some relief because, as other speakers have wisely mentioned, we've got a fair amount of hedging going on into this, both last week and this week, both on individual stocks as well as index ETFs and at the index level and in futures.
Cool. Tony, anything to add there?
I got rugged by Spaces. So there was a question, I forgot what it was, but I wanted to answer it.
Yeah,
I think
it was by Alex. Yeah.
Could you ask it again? Sorry, it took a little bit to get back on here.
I was just asking about will crypto affect in any way going into Fed tomorrow? So does it have any effect, or does it not? That was my question.
Oh yeah, I mean, I think it definitely does. I was just charting ARK against ETH and just seeing this is obscene. All these are exactly identical, and it is very telling. If you cross assets and you see what's going on just on the macro scale and everything, and then you look at crypto and you look at growth stocks, and then you look at the FANG and all those names, I think it'll definitely impact it. But I also think that the fact that Ethereum's still 3,800, and if you look at stocks and stuff, they're down way more comparatively than ETH is, or Bitcoin, for example. Both of those are holding better, which means that regardless, the supply demand on there is way better and in favor of the upside. I would be bearish crypto if crypto were down more than stocks, though crypto is up more than stocks, and stocks are a way bigger asset class. And UB has just gotten pummeled too. So bonds, so if you just kind of see that they're probably still actually the strongest asset class in terms of anything risk, that just leads me to believe that the number of people entering is faster than the number of people trying to exit. And that does make sense because there are times in history where those kind of situations occur, and I think this is one of them for crypto. And so knowing that just like the adoption rate is beating out the bearishness is kind of what I see happening. Just because it'd be 2K. Like the last time ARK was here, ETH was 2K. ETH is 3,800 now, and that is simply all I need to know. So yes, it will impact it in the short run. Long run, I'm literally just buying every single dip in crypto personally. Like just my own, personally, that's what I'm doing. But that's not to say that I don't think it could go way lower. I just, long term believe that all of crypto is not worth Apple. So just think, we're at 19% of people holding wallets. Like it's starting. So I think that people, need to understand that there are market forces and then there are like consumer forces. And I think it's one of these rare situations where institutions and people are all late, except for the few people that were early. And so it keeps the quote unquote Ponzi, just like SPY, moving forward. Because obviously people track SPY, and the reason those names are inflated is because everyone buys the tracking index. So just knowing that's kind of how that works. Like I am super bullish crypto into next year. And we pinned this last time on on Twitter here, that there's just like a ridiculous amount of private VC investment going on, and like they're not knowing the structure of VCs. Like they're not in that for a year. They're not in that for 2. They're in that for 3 to 5 years to flip out, exit, or or maybe IPO or spin out or whatever. Like they're in that for a longer time period. And this is exactly what kind of happened in 2015, 2016 with all these growth names. So like the VC funding for them before that, and like knowing where they came now. So just kind of seeing that spade is spade. Like I think that we're still drinking beers in the dugout. Maybe we're like walking to the stadium now, because I've been saying drinking beers in the dugout, like drinking beers in the parking lot for a while now. But I think we're finally like making our way to the stadium, and then we have like nine innings. So it's I think we're very early on this still. And while the Fed might actually make a nice capitulation bottom just to wipe out leverage tomorrow, it could also just be like ETH is at 4,500 by Monday.
Awesome. Hopefully that answers your question, Alex. I think everyone chimed in there, so thank you guys. I always feel bad kind of trying to figure out when to end these things, because questions are never stopping. But as I say that, more flow in. Prashant, go ahead.
Hey Tony, thank you guys for accepting my request. So Tony, you mentioned about cryptos holding well compared to the growth stocks. Do you think staking the cryptos play an important role, which is holding the cryptos quite well compared to the growth?
It's a good question, and I was actually just thinking about this the other day, because it is essentially like, how there's like different layers to investing in stocks. Like they have people who like there's locked up money that are in like in mutual funds, and you have like these 6 months and 12-month periods, or like your 401k, and this staking is literally just that. Okay, like it took me a while to like just actually compare that. That's how liquidity stays locked, and thus like propelling real estate and assets and stocks to go up, especially FANG. So like knowing that people are getting more and more involved in DeFi, and there's a bunch of new, and like I'm super heavy in DeFi right now. Like NFTs are super cool. Still like them. Still have some NFTs, but like I'm looking all the time at DeFi, just because the biggest asset class is not assets; it's debt. So if you know that that's where all the money in the world really is coming from and moving from, then you want to know like what's the iteration of that'll be on the blockchain, and so that's obviously DeFi. So you're definitely right. Like I think staking and staking, LPing, like pooling. Those are things that are going to be propelling the price up over time. And then also knowing that, I wish I had a tweet for this because it would be super cool to show people, but the amount of ETH and the amount of Bitcoin on exchanges just like continues to go down. And I also saw a chart the other day that showed how this time was like a very different buying and selling than every other time, because once again, the institutional ownership is just going much higher. And more wallets are being made every day. So I think that those different ways that money will be pooled, and like the reason why DeFi is crazy is because you can bootstrap like 500 mil in like a night, and I've seen it like multiple times, and it's just mind blowing. And so like there's never ever been a way that you can like just create that much money without being Powell and clicking the bird. So and like then once again, obviously we run into the problem of like the U.S. government is just one node, and and it's unlimited supply versus like finite supply. So right, like then it becomes a discussion of why obviously blockchain and crypto is far superior to just a standard monetary system. So sorry for being long-winded, but this is a great question, and I think that it's something that's super overlooked but like incredibly crucial. And that's why DAOs and treasuries have such high APY, because locking real liquidity is harder than it seems, especially because of how much money is floating around. But there's a difference to fake money versus fake real money.
Got it. Thank you, Tony.
Awesome. Tangapati. Yeah, sorry, I'm not even gonna try.
That's okay. Thanks, Rahul. First of all, thank you guys. For the space is awesome. Like newbie like me, learning many things in the world of stocks. Appreciate that. So my question is like, as a newbie, like as I'm trying to learn more about stock market and the world around it. I'm hearing a lot of tweets about this Santa rally, but as to my knowledge, what's happening right now in the market is more towards Fed's coming out tomorrow talking about tapering, and more likely market about to head down with interest rates coming up, going to be raised. So where does this Santa rally fit in? Like how does it this pops up? Is it a possibility? Like am I missing something? Please throw some light on that.
It doesn't.
Yeah.
That's the thing.
Thanks.
Right now, that's what's happening.
I have information
Yeah,
in this regard if you want to hear it.
Hold on, Tony, go ahead.
Yeah, I mean, sure. I was just gonna say, like, it all depends on tomorrow. Like, you will either get a Santa rally or not, based on like tomorrow and the day after, in my opinion. So, like, it's still, as much as like I would love to know what's gonna happen. Like, you gotta wait till tomorrow.
I think the themes around the market, there's a lot of them, right? There used to be this thing called sell in May and go away. I don't know if that still holds true. There's seasonally the past couple months. I think September, I believe, statistically actually is proven to be the worst month of the year. There's the past couple of years we've seen February tops and then people kind of selling and having these March bottoms. So there's a lot of themes, a lot of different things that kind of happen, and people try to, I would say, figure out if it's going to happen again or if there's a chance that it happens in so and so year given current conditions. But it's just hard because it all depends on macro and kind of what's going on with the Fed and the given market conditions. So yes, I mean, there have been Santa rallies and it's usually end of the year, closer to Christmas, as you can imagine. But if that happens this year or not, I think, like Tony said, we will get an answer tomorrow, and trust me, we will be on Spaces and covering this as much as we can. We've been getting this question probably 3 straight days, so for sure we will talk about them more if we see it potentially happening. But right now, I don't think anyone can give a definitive answer.
Yeah, and every year people start talking about the Santa rally, or like late in November, early December is when the Santa rally chatter starts to pop up, and people don't, and then every year, at least for the past 3-4 years, the early part of December has been typically kind of difficult, and then later in December is when we have the potential to see that Santa rally, because it really occurs the last week of the year into the first week of January. It's not an entire month of December, rally leading up to Christmas. It's in fact, in my experience, the latter, where it occurs closer to or after that week, that Christmas week. And I think this year is setting up perfectly, for that potential rally into the end of the year in the first part of 2021. And it all starts with the last 3 trading days of this week, and kind of see which direction the Fed's going to go. I mean, this is all stuff that we've all said hundreds of times over the past week, and you guys have said it masterfully again.
Yep.
Yeah,
Thank you,
seasonality-wise.
TSDR.
Sorry
Go
about
ahead, Kitty.
So seasonality-wise, like TSDR said, it's usually 2 days before Christmas and after, and 1 week into the New Year. That's the typical period for the Santa rally. It's not all the way from November to Christmas.
Cool. Tangapati, does that answer your question to a certain degree?
I
Oh,
understand
no.
that. I'm not very close to the history, but thanks for the information. But more likely, like with Fed's coming up and giving more likely a negative news towards tapering or more towards tapering and rate hikes, is like how does still this kind of chatter is active is what I was just thinking around. But
It's active because people think the Fed might get a little bit more dovish, or you might actually come in line and they don't surprise us. The reason this downturn has happened is because the Fed kind of caught everyone off guard, right? I said this a little bit earlier in the November meeting. So I think you're always going to have bulls and bears, right? People are obviously trying to figure out when the bottom comes in, when do we rally, where do we go from here? So the chatter, I think, will be existent. People like to link it to these type of events all the time. No one knows anything. to be completely honest. And I think this is a really good point to actually plug this in. But Twitter is a great place to be engaging and learn from very smart people. I've learned a ton. I mean, these speakers here, I've connected with them. They're amazing. But just be careful what you're reading into, what you're following, how you react to certain posts. I mean, there's certainly not the best information sometimes on here. So, but in this case, I think it's just general theme. I don't think I wouldn't look too much into it. We'll see tomorrow if you have time to jump on tomorrow. We'll definitely cover the Fed after the meeting.
Rahul, thank you. This was, I think, the perfect quick production to what I'm going to say. Is it okay for you if I make like 2 sentence? It's like a story, but it's a bit cryptic, so I don't want to like confuse people. So I'm asking beforehand.
Yeah. No, hold on. What's the story about? Is this about the stock market, or is this just a general story? Like, are you going to go Shakespeare on us? What's going on?
I'm going Shakespeare, but in crypto technology, tapering, and central stuff without
I want to hear it.
You know
without
what? I was just gonna
fear.
say if one more person signed off, then I would say yes. If Tony says yes,
Yeah,
then go ahead.
I want to hear it. I'm just so curious. Like, yeah, go ahead.
Please, thank you. So, first of all, there's not going to be a planet breaking apart, so please calm down. Second of all, even though it's in the Illuminati card game, right, it's not going to happen. Third of all, I just pulled off my pullover. It's in black navy, and it stands there on white letters. I am leaving it as I found it. Take over, it's yours. I guess it's from the Fed. I have no idea if it's true. And third, and this is just what I'm having on me, really. I'm not like some secret whatever guy. And I'm having as well like a To The Ranch t-shirt, but if I'm looking from top down, the arrow points left. And if you would
Oh,
look at me, it would go
I have
right.
no idea what you're saying.
And
Rahul, are you?
that's fine. That's fine because it's about thinking and then acting with your own beliefs and your own worldview without confusing people, without trying to control either. But then you will make a lot of money if you just think about one thing. Be safe, stay happy, Merry Christmas, and may God or whatever you believe in fulfill you with a lot of grace, happiness, and peace. Thank you very much. It has not been a message from Anonymous or Illuminati. Thank you.
Okay, this was actually beautiful. I that was a nice message. Thank you.
Yeah, no, thank you. Look, I
You're
think we're all trying to
welcome.
help each other, and I think that's a good
Yes,
theme. So,
yes.
however you want to say it, I think your core foundation value, what you're trying to drive, is definitely good positivity. So, thank you.
It's
Um,
great. I'm
yeah.
neither a bear nor a bull. I'm gonna win. I'm gonna really win anyway. And even if I lose all my money, I still got the movies like In Time, Arrival, and whatever else Hollywood conjures up in their kitchens. I'm at peace, with left,
Yeah.
right, top, bottom, whatever. And I think all of you are gonna make fantastic money, and pounding on the table, whatever table that may be, and with whomever you want to pound to. And I love you all, and I want to wish you a Merry Christmas or whatever is celebrated at your part of the end. And thanks God, and bye bye.
Thank you. Thanks for joining in.
You're
I think moving on. Jeremy Lin, what's going on? I see you again. You were on yesterday too. I gotta give you props every time you join, man. One of my favorite Knickerbockers of all time, to be honest.
Of course, man. Yeah, love what you guys are doing. I just want to discuss,
Please don't go random story on us. Do you actually have a
Oh
question?
yeah. No, I just want to
Okay.
discuss, maybe a potential narrative for tomorrow that I don't think a lot of people are discussing right now. But I know we think definitely a possible scenario would be, dovish policy. Fed thinks that inflation is, somewhat peaking right now, and they don't think that, you know, expediting the taper is the best look for the economy, and I think that would obviously cause profound short covering amongst all these growth names, and you could see a spike as TSDR was mentioning. The IWM, it is sitting on pretty historical resistance right now, but I think what I'm really watching for tomorrow is movement in the 10-year. I know we've seen a flattening of the curve, ever since mid June. So I actually think a potential narrative could be that the Fed tomorrow comes out with overly hawkish policy, but we see a spike in the bond market, and that actually could cause a rally in some of the industrials, more of a sector oriented rally, and then maybe we see these growth stocks catch up later into December, heading into the new year. I'm definitely going to keep my eye on the bond market here because I know for much of the summer the industrials actually were the ones leading the charge, and it wasn't until as of recently, the past 2 months, where these growth-oriented companies came to the forefront of these also gains we're all making. So yeah, that's definitely something to keep an eye out for tomorrow. But would love anybody else to chime in on how they think that could potentially happen.
Yeah, that's a great call. Definitely be watching the bond market tomorrow in the 10-year. And also just like I think we were saying this earlier, but just kind of to connect it for everyone, look at lumber, look at crude, like look at things that are obviously like very big parts of inflation, and just see how they react around news. So like if you get a ton of bond buying, then we're probably going to be.
Tony, is your hand over your phone again or your mouth? Sometimes you do
No,
that.
no, sir. You can't hear me?
It's not as good as it could be.
1 second. Let me switch to Wi-Fi.
The quality is still top notch, though. The content.
Yeah. Maria, are you actually there this time?
Yeah, Twitter kicked me
Maria.
out.
Does she know she needs to unmute? Sorry about that.
No, go ahead, Maria. You've been trying to ask a question for a while. When
No,
Tony fixes his Wi-Fi, just wanted to catch you.
Maria is a friend. But I have a question. So if Fed says that excuse me, if Fed says something negative and market starts to go down, what do you guys think about the long-term portfolio? How do you hedge it, or do you hedge it ahead of Fed's decision, or what do you do?
I think Tony mentioned that a little bit earlier. I think he's already fully hedged. I personally, I can't actually get into many different types of call options just because of the job I'm in. I have certain restrictions, but a lot of my portfolio is long-term, is invested. I mean, I have some cash, I think like 9-10%, but I don't know if KT, because I think KT, you manage both sides, right? You manage a trading account and a growth account. Are you hedging a growth account?
Nah, I don't do that. I mean, I like I said, right? Like I keep selling puts here and there when there's this high of a skew on calls and puts, but otherwise, and you guys might have already known, I sold my majority stake on Apple, and most of my money is actually sitting on the sidelines. I'm ready to deploy, but I want to see
Are you looking at any specific stocks, KT?
Yeah, Facebook, Amazon, and Airbnb.
Nice.
Airbnb looks good, KT. I agree. I think long term that one looks great.
Yeah,
I think Amazon is interesting too here.
I mean, the Amazon for me, like I was saying yesterday, right? Like I need to see that value unlock. Split is good, but then what I want to see is basically Amazon splitting into two companies like AWS and Amazon Retail. That would be pretty.
Do you think that really would happen, KT?
I don't know, but it might actually.
I think
Amazon.
it was more of a possibility before Jassy took over. Now that Andy
That's
Jassy
what
took
I'm
over, I
saying,
think it's
yeah.
less of a possibility that they ever split into two companies.
Yeah, I think so too.
If you look at the chart and the technicals, ever since it kind of got that pump from the COVID V-shaped recovery, it's been a consolidation phase, and it's right on the trend line. So I think it looks like it's waiting for.
It does that. It's done that in the past too, right? 2018 to 2020 it didn't move, and then you saw a huge ripper. Kind of like the longer the base. What's the saying? Longer the base or something, the bigger the rip or something like that.
Bigger the base, bigger the rally. Yeah, Rahul.
Yeah, exactly. So it's happened with many names. So Amazon is a very interesting name. I own it. It's the type of stock I just don't even think about, honestly. Maybe they become a $10 trillion company. Maybe they don't. I don't know. I have no idea what happens. But they have so many different ways they can capitalize. I mean, I'm just holding for now, and they haven't really said anything or done anything that would change my thesis in the company overall as of now. I mean, I was a little bit concerned when Jassy took over, not because of him, but when I bought for Bezos, and I was invested thinking Bezos was still going to be around. It's actually a good point. Tony actually predicted the other day he thinks Musk is going to be gone by 2024 from Tesla, and I think, can you imagine the shocker trying to replace his shoes, Tony, and Tesla? That'd be insane.
Good luck. He'll be out of
like
more than half his shares by then.
Yeah. I don't blame him. I mean, he built it into a $1 trillion company, proved all the naysayers wrong. I mean, he literally created an industry. What else does he have to prove at this point? I think just to get these couple products out, I really think he should. Just because he's promised them for too long now, I think since 2018, 2017. But I think mentally he's looking at space and living in Mars and, creating multi-planetary life and becoming the first man to do so, the first man to $1 trillion possibly. Oh, by the way, I completely forgot, actually. I have a space planned, Tony, I think to you guys. Whoever's listening, if you guys are Tesla fans, Tesla bulls, Tesla bears, Tesla anything, Tesla is not the next Tesla, Tesla is the next Tesla, whatever you want to call it. Next week with Sawyer Merritt, who is one of the best accounts for Tesla, next Tuesday night, 8 p.m. I will be sharing details for that
Yeah, he
very
loves
soon.
Tesla so much, Rahul, that yeah, he's definitely like one of the biggest Tesla guys out here. He makes me
It's
like
insane.
hate it. So
He
that's
gets
a good one. I can't wait to see
information.
that interview.
Dude, he gets information that Musk will comment on because he gets it so quick. It's insane. I've seen Musk comment on his tweets at least 5-6 times. Yeah, I hosted him. I think a month or two ago. That interview is on Pounding the Table
Dude,
YouTube.
imagine talking to
That's based really well.
Musk on Twitter.
Yeah, so if Elon shows up, you guys might be missing out if you don't show up. So next Tuesday, save the date, 8 p.m. Eastern, we'll be on. Tony might make a guest appearance. Who knows? Tony's a wizard. I don't even know whose question we were answering. I think it was Jalen, and then
I,
yeah,
I have I have one comment on the Tesla conversation.
go ahead.
I don't think that Elon has 1 foot out the door quite yet, but I do think that he's in the corner of the room looking at the door, if that analogy makes sense. Because I
agree
do
with
think
you.
his heart.
I agree with
Yeah,
you.
I do think more of his heart is definitely leaning towards the future of SpaceX, and that's kind of I think more of the legacy he wants to leave behind. However, I do think leaving Tesla too early would be a huge mistake for the future of Tesla. I think if he leaves anytime before, in the next 5 to 8 years, 5 to 7 years, I think that would be a huge mistake for the future of Tesla.
That's
And
what I
don't.
was telling Tony too. I just think you can't. How do you replace this
But I
guy?
think it's op
Especially,
cost. Like, right?
yeah,
Like the company will
yeah.
still make cars. Somebody has to get to space. Like if you predict like where climate change
Yeah.
estimates are going to be by 2030. Like it's not really like it's out of necessity, which is the only reason I while I totally agree with you and it won't be the best thing for the stock, I don't think he won't do it anyway because he knows in his mind like Tesla's already going to be producing 1.5 million cars next year. Like they'll get the Cybertruck out. They'll have X number of gigafactories. Like I think all the things that Elon's talked about in Master Plan Part 2, which
He's
like
laid the
ends like when
foundation.
did he
Yeah,
drop
he's
that,
laid the
right? Like 20
foundation.
Rahul, like if you check what year he dropped that, at the end of that is when he's gone. I don't what year was that? I think that's like because if he does everything he said he would in that plan, then I think he's like
I'm
okay,
telling you, it's only
I
2
told you
years.
guys.
If it's that plan, it's 2-3 years tops. And I think the thing that you had mentioned the other day, his age is a big factor as well as his health. I think it was Rod Barron was talking about how this guy's working 16, 18 hours a day between 2 companies. I think he's 50 plus. I don't know his age, but I don't know how much time. I'm not someone that can forecast anything about life expectancy, but in terms of his peak performance, I don't know how much he can handle of going like this at this pace. So, I do know space is truly important to his heart. I think honestly more than Tesla, like you mentioned. So,
By a mile.
yeah. So I don't know, but I think this will be interesting, and we can talk Tesla for days. But next Tuesday, come on, anyone's interested in Tesla? It's only space will be only about Tesla, nothing else.
I'm
Only
down.
Tesla, Tesla questions, Tesla everything. So,
And I
please
just want
join.
you to know, TSDR, I do agree with you. Like he definitely is still not 1 foot out the door yet. But I know Elon thinks on many different time dimensions, so I know that he's like making the long term moves, which is why I actually think Tesla will start just cranking things out way faster than people like. I know there's obviously like supply constraints and stuff, but Elon's. They were like one of the only cars that were doing well during COVID versus all the other companies. So I think that he's going to really pick up the handle just so we'll have the chance to make everything happen the way he wants it in life. Because like you can see the clear stepping stones, right? Like he has like 20. So that was being in 2016. So 2026 would be a master plan part 2. So I think by 2026 is my guess. But either
That goes
way,
with what TSDR was saying. Yeah, 5 years.
yeah.
Yeah.
Yeah, okay. Maybe I was predicting too early, but I do know that like the Mars thing in 2024, I don't know which is going to be more important. So I think it'll be up to Elon, obviously, to decide. But it's interesting to watch because I think that he'll obviously find an incredible replacement. Like I know that he wouldn't leave his baby in bad arms, so maybe he's grooming like the next Elon now, like Tony Stark does to Tom Holland.
That was great.
That was good, dude. I think going on. I think we did answer Jeremy Lin. Prashant, did I get to you? Honestly, I forget where we were. I think Carl Ball, you had a question too. Bollinger. One of you guys want to ask? Carl or Prashant? Anyone?
I didn't have a question. I just got good news to share, and I'm super stoked. And I just figured I could share it. I did really well this semester. I got a 3.86. I made $10,000 in sales for my business, and yeah, I'm just stoked. I just wanted to share good news. That's it.
That's awesome, man.
That's
Well,
dope.
congrats
Yeah,
on
man.
finishing a good
Congrats.
semester.
Congrats.
Yeah, I don't know who Carl is, but nice to meet you and congrats and hope you do well in school and life and keep joining these spaces. It's kind of cool. These people are just coming up and sharing good news. Yeah, I guess you have news to share. That's positive. I guess feel free to do so. Where is did we lose KT and Luca? I don't know what just happened.
Oh, I'm here.
No, KT's here. Sorry, MM. I don't know what happened to MM. Greg, I see your hand was up. Is Prashant here? Do you have a question, Prashant? MM, go ahead. No, what am I saying? Greg, go ahead.
I have no good news to share. I got a couple of tactical questions for Tony. I'm bullish on Coinbase as an entry point for any new entrant into crypto, and just kind of curious how you're thinking Coin right now, and like if you're on the sidelines. I know you guys did a deep dive on that, but wanted to kind of hear where you're at on that. And then the tactical question I have is with like ETH or Solana or any of the coins that you really like, how do you manage your trades in that? Like, do you set key levels? And you said you buy in any dip, but are you like setting key levels, and are you trimming on like any massive rips? And kind of curious how you manage that. Thanks.
Yeah, man. I totally agree with you about coin. Like, it's right around this like super strong level. And like I don't know if you heard earlier, but I was saying that the fact that ETH should be 2K right now, but it's 3,800 means like as much as everyone wants to lump crypto into growth names, you shouldn't, because you're wrong. Like, the math is telling you that it's wrong. So I feel like I agree. I think that coin is not a crypto. I think it was, it'd be probably busting right now, because if you think about all these moves, the volatility, the traction fees, this is for coin. Good market, bad market, good for transactions, period. And then you understand OpenSea just got a $10 billion valuation, and coin's opening with the amount of people on that wait list at 6 times OpenSea. And like, it's more than 6 times now, because OpenSea volume is like dead since the first rally. It's like far down. It's like 300K now or less, usually daily. So if you just think about that, I think coin has like double its market cap in something it hasn't even started yet. And that's just clean money, right? Like, people will always feel more. I would feel far more secure having Coinbase like trade my NFTs than OpenSea, because like while OpenSea is decentralized, it is not. It just isn't. There's been too many situations where I've seen where it's just clearly not, and it's like Big Brother steps in and you're like, get out of my face, because like, why are you here? So I think Coinbase has a great opportunity, if they don't botch it, to completely just own the market for whatever NFT, and then knowing that the most wallets exist on Coinbase will just be an obscene connection. And also Coinbase is getting heavily invested into like providing DeFi programs. You can earn a lot now. So I think knowing that DeFi is far bigger, right, and like debt is far bigger than assets in this world, and crypto is probably going to be no different, because people are people. It will be a huge market for them too, and they'll make money on all that. So definitely bullish coin moving forward. In terms of like ETH, Sol, and like moving money around, like there's this like meme called the rotator with like a bunch of O's and an R, and that's me, because I think the name of the game in crypto is to completely remove your idea of US dollars. And as much as it doesn't seem intuitive, it's counterintuitive, but it definitely works. And one ETH is one ETH, and I genuinely stand by that, just because if you're in crypto and you know that like you should track yourself in Ethereum. And I think that the majority of people who are trading crypto do that, who are like deep in the space, definitely, because it is so far this year by far the most stable coin of all the big like if we're not talking like stable coins, which is like just a dollar, but looking at ETH, it's holding up much better, and it's gaining against Bitcoin. So I think people know that, and all the layer 2 adoptions on ETH and everything going on with that, and the ETH2 coming up with and everything, like they're burning fees daily. So the mechanics for it are far better. So I'm always taking money from ETH when ETH is like popping or ETH is dipping. Like recently ETH is dipping, but DeFi was dipping far more, and I knew that would correct. So like I moved money from Ethereum into that. And then when it pops again, like when my Wonderland like bags pop again, because I got in like at 4,100, and then I averaged down at 36, and then I averaged again at 2,700, and now it's at like 3,500. But I've been rebasing like 14% the whole time. So like I take those bags when they come back higher and go back into ETH and Sol, and then knowing also that NFTs and ETH are inverse relationship. Like there's blue chip NFTs like Cyberpunk babies or cool cats, mutant apes, and stuff that are still good investments. I mean, the best investments, if ETH goes to 2K, those will be far, far higher, because people still price that, although they shouldn't ETH, they price it in dollars as well. So I think just knowing that it's very much a bonsai strategy, and your core, goes back to ETH and Sol and other coins like Luna and AVAX, like those top 20, 30 coins is very crucial, because like there are endless projects. Trust me, like I've been having difficulty not buying a bunch of things that I know are shit, but like there are just so many projects, and some of the yield is really like kind of makes you feel like funny money. So knowing that there's so many opportunities that are good quality, just like understand that in a bad market, the ones that are not the quality will go down. So it's prudent to like when crazy things that shouldn't be ripping, like just random DAOs or random like shit coins and memes are ripping really, really hard. There will continue to be pullbacks that are like 20, 30, 40% like there are now, and even more for other coins that are like the smaller the market cap, the bigger the pullback usually. So just know that like you should be stacking ETH, and then that's like a very common, not like ETH in particular, but like stacking a safe coin or safe coins, and just continuously like if you like invest in a coin that's very small and it does really well for you, then like
Tony, you're cutting
trim
off.
some profits and
Tony, you're cutting off again.
just like managing your risk and managing your account. It's just like stocks, except like crypto can be much crazier.
Luca, are you there? Someone there? Tony, you're cutting off.
Gains. So depending on how much you believe in.
I think we might have lost Tony there.
Yeah, that's right. I was trying to say for the past like 90 seconds. Yeah,
I got the
you cut
gist
off.
though. Thank you so much. That's helpful. Appreciate all the Fed talk. It's very helpful.
Yep, thank you, Greg. I think with that, I'd like to call it a wrap. I think it's been almost 2.5 hours. I just locked in himself for another space, so I'm pretty excited about revealing details about that in the coming weeks. Thank you, everyone, for joining. Hopefully, this made sense. Yes, Tony, everyone heard you. Tony just pinged me. I think you just cut off for the last 90 seconds. Thanks everyone for joining. Thank you guys who came up to speak. If you guys enjoyed this, we'll be on again tomorrow live 6 p.m. I have the tweet pinned above. Give everyone panel a follow too. These guys do some incredible work. PKT, TSDR, Tony dropped off. He has a Kong picture. You can recognize him pounding the table, as well as anyone else that you enjoyed hearing from. With that, I think I'm going to call it a wrap here. Anyone has any closing thoughts before I end the space?
I just want to say thank you, Rahul, and Pounding the Table for hosting this. I really appreciate the platform and the conversation. It's been phenomenal. I think it helps a lot of people in preparation for tomorrow and the end of the year. Sorry for the background noise. I'm getting some medicine for my son, but I appreciate you guys. Stay prepared, protect your capital, do what you got to do. Thank you.
I just wanted to thank everyone for tuning in and thank Pounding the Table and Rahul, you guys, for hosting this. Tony, thank you, everyone. And, just with what happens tomorrow, it's not necessarily a binary event. There are many different outcomes that can potentially happen in terms of what the Fed does, what they say, and how the markets react. And the initial reaction might be a little bit of a fake out. So be patient. If you're not experienced trading Fed days, don't necessarily trade it. If you haven't already hedged into it, there's probably not a lot of use in hedging now. And if you're a long-term investor, there's really no use in changing your position. And you just ride through things like this, and you look at the bigger picture. So hope everyone has a great rest of your week, and look forward to catching up soon.
Awesome. Thank you guys, and thanks for tuning in. We'll be back tomorrow. If you guys want to get more notifications, these happen. Best way to do so is just by following us. Tweeting, you'll see it. But with that, thank you, and thanks for listening in.
Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money,